Okay, can you hear me there, guys? G'day, Paul. How are you? Hope you had a good Easter, mate. How's everyone else going? We've got a few in at the moment. Sorry, I actually forgot to press start on the on the stream. Wonder why no one's on there. It's getting a little bit depressed there for a second. Great work. I hate to say, we had a bit of a rough 4 days off. We had a little boy on a Friday, was out with gastro, and of course it come through the family. So by Sunday, Monday, we were gone as well. Yeah, just over it. Like Tuesday, which wasn't too bad, but pretty much spent most of the time relaxing. The little girl too, she was a bit rough, I think, for a few days there. All right, let's enough of that talk. Yeah, no, all good, all good. We're all good now. Welcome, guys. Anyone that's new or anyone that listens later on that's new, welcome. This trade setup live stream. We're on Mondays and Thursdays at 12:30, and it's try quite to remember what day it was. Yeah, 12:30. Having a bit of a chat about the market. So we're happy to talk about anything. If it has to be, we don't have to be straight stock specific. There can be also currencies. We take a look at a few things just to get an overall picture. So I want to go through those in a minute. If you subscribe to us or link into us at Twitter, it'll be the top left-hand corner. It was at trade_setup. I think if you just put no underscore, it comes up with something else. So it won't actually be us, but we'll be posting different bits and pieces on there. Facebook, you can link into us on Facebook. We're not obviously as active there. And the bottom right hand corner, you'll see us at YouTube. That's our YouTube address. You can just subscribe to us there and have a bit of a chat. Anyway, let's get stuck into it then. The market's not bad today. I don't know if anyone saw it at the start of the European session yesterday. It got poleaxed. I think it was down that the Dow was down about 400 points on the futures, probably a little bit more at one stage, and everyone was really sitting back waiting, go, okay, we're going to get poleaxed the next day. And if I got to change my chart again, let me go back. Yeah, so a lot of people were just obviously expecting the market to be a bit unkind today, but then the US turned around and bounced. They had a big, so pretty much they ended up about, let me just guess, I think the mini was up about 100 and something points. So it had about a 600 point turnaround from the lows, which is bloody good. I think what obviously you probably know by now, China came out and retaliated with a few different proposed tariffs of their own. Obviously, that was just after I think in the Asian session anyway, just after our close, about 4 or 5 o'clock. And then obviously you can see the market start to sink. US dollar was sinking. Gold was rallying. Gold had a big turnaround too. If you go look at a chart, we'll have a look at that later. Took off and then turned around and fell over again, pretty much back to where it started. So I think by the end it ended up flat. So it was interesting. It was just interesting to see the big turnaround, and when you just grind through the news, which is all fair enough. I think there's going to be a lot of argy-bargy between China and that's what a lot of people are probably expecting. More negotiation than a trade war, full-blown trade war. And there's going to be, like in any good deal making, there's going to be argy-bargy, and it could take a few months. Now they've got obviously coming up in the US is their reporting season, and they're expecting to be, I think, overall up 18.5% thereabouts. That's according to Reuters data. So they're expecting some really good results. So obviously those tax cuts are flowing back. So they should be quite positive. And there might be a bit of a, buy the dip mentality down here. Pre those reporting seasons kicking off. I think it's in a week or two. I can never remember the dates. But anyway, that's what could be. And obviously with that coming up, and there's an argument both sides whether trade war can have a negative impact or a positive impact. I think the negative impact, if I remember correctly, no, I don't, do I? Obviously, yeah, okay, a negative impact tariffs on specific items in the US that's sort of mainstream items which really could crimp growth, and obviously hamper growth in the US, economic growth in the US. Or positive effect is that they do trade war reduces their overall deficit, which is not deficit. What do you call it? Oh, I forget the word now, but it's going to be better for their economy. If that's the case, it reduces their something with China. What is it? They get more exports. Anyway, we forget that what that's called, but that could be quite positive. So it's a bit of a I don't know, it's a bit of an uncertainty, obviously, at the moment, and when that's going to play out is more of the uncertainty. I think there's a lot more positive in line before anything negative flows through to the US economy. But we'll take a look at the Dow. And there's a lot, I guess a lot of you in here know a lot more about the macroeconomics than I do. I tend to forget I'll just base mine off charts, more or less, but I think it's more of that argy-bargy that I'm looking at between the two. I don't expect anything bad. I think there's going to just be opportunists. You know, the US are probably throwing it out there. We're going to put tariffs on you, but they don't intend to do too much. They just intend on getting, you go for broke at the start when your underlying idea or your underlying goal is to get a lot less, if that makes sense. I mean, you never go bidding on a house exactly what you want to pay for it. You always bid lower. And I think that's pretty much what the US has done by coming out and saying putting on tariffs and all that sort of stuff. And obviously China fighting back with a bit more. We're gonna whack you hard too if you whack us hard, and then so be it. And they come to an agreement, but it could take a long time to come out to play out. So I think that's going to start filtering out in the news. Obviously, like bonds, US yields. They were talking about yields as a massive thing, gave us a big sell-off. Where are they now? I mean, no one really talks about them, but they're still quite high. They're still, it's having a bit of a correction off the highs, and they could be spiking. That'll come back into the news sooner or later. We'll take a look at those two soon. Um, what's going to happen then? Has enough heat come out of the markets yet? I mean, look at the Dow here. This is on a weekly chart. You can see that sell-off from the highs to where we are, or to those lows. It's been quite heavy. There's been some heavy selling, yet it hasn't really corrected that much. Potentially, I'll make that a bit bigger. We spoke about this before. This could be that first leg. You got a lower high and the secondary leg. So, which would suggest we've got somewhere around 22,000 to go, potentially. That push down, or even 22.5. We could head down to 22.5 before we start finding some buying. But that's that secondary leg down, really to clean out a lot of the buyers and then start building from there. And there's going to be a lot of time to reset the market, where you start getting in buyers and sellers match each other off. They're in agreement, and then start building the higher lows to head higher again to continue that trend. But you can see that when things go near vertical, you can see the steepness of it. That's always going to end in a bit of fear and greed and people just running for the doors. When it's more controlled, the pullbacks are not as savage. Whereas you see when they go near vertical, the pullbacks are a lot deeper and harder, and they really catch you off guard. A lot of people off guard. So that still could be playing out, or it could just find support at 23.5. That support through here and just bounce around before starting to build. But I still think it's a time factor. Could take a fair bit of time before it starts building. Same with let's get over to the S&P. Again, the same scenario. It's had a good move. You've got that lower high in place. That's confirmed because we traded down to those lows. We have bounced, whether it's just a reaction off those lows or we pierce straight through to extend that move down, potentially 24.5 before we start finding a bit of support. You can see it does the same sort of price action again and again. You've got that move down here, pop back up. It build essentially, that's a lower high or a double top, whatever you want to call it. It's more of a lower high here, and it's just washed out those lows. We draw that now. So I am looking for, so that should move down and then potentially, it's just washed out that low by about the same amount as the top, if that makes sense. So that's what we're looking at. And then it started to build. We've got that pushed down. If we're going to look at that, it could be somewhere around, around this zone, 24 to 24.50, if that's the case. Or we could just potentially hold up right where we are now. But you'd want to see, like I said, it's popped down, it had a good move up. You'd want to see, I would prefer to see a washout and then for it to start building before the confidence. It's going to take a while before the confidence can come back into the market. And that might, what are we on a weekly chart? That might still take a few weeks once we get through reporting, some good results there, or where they buy it up into reporting and we get that secondary sell-off. Who knows what's going to happen, but just be wary of what the chart's saying. Nothing's over yet. I mean, for this correction to be over, you have to come back to or punch through that 28 mark. That's a long way off. So I'm expecting more of contraction in price. I want to see the volatility come out of the market. Once the volatility comes out of the market, it's more of that, like I said, the buyers and sellers matching each other off at a point of agreement. Once you're at a point of agreement, then you're looking for signs of it to continue to move higher. But at the moment, I don't think we're at that point of agreement just yet. Pretty much in any of the markets, there's a bit more action down here. You can see it did push down, had a bit of a lower high again with that move up to 26.75, then tried to have another go at those lows. We've reacted back off, but we still, it hasn't been confirmed just yet. We could easily head south today, tonight, take out those lows, boom, down we go. What do we got? FTSE. Yeah, nothing's really changed there. That's on the weekly. See what the weekly's saying. It's a decent correction. It's cleaned out a few of these late buyers that bought it pretty much through 2017. Anyone that's bought it up through here is, if you're holding through 2017, you're underwater at the moment in the, probably the last few months or so. So that's not looking too crash on the FTSE, too crash hot on the FTSE. But they do that a lot. You can see it did the same sort of thing. It just popped up through here, had a decent correction, and then started to build with this price action in here. So it may start to do a bit of that. We need a pop up. We need a good correction on the FTSE. We need a good, decent pop up, say 72 to 72 to 73, where it retests just below and then pulls back and builds that higher low and then starts to go from there. If that's the case, then good. It is extended. It's looking extended on the weekly. The daily's just bounced off extended. It could start to, again, it's that volatility we need to come out of the market. Okay, Noel, how are you, mate? The DAX is probably, it's similar. The weekly is a bit better. It's still holding up around that 12, 11, 750 to 12 mark, and it's testing it. It's still putting the pressure on the downside, and it could still continue to put pressure on the downside, especially if the Dow and the S&P roll over again and extend those lows. But again, we just have to see. XJO, let's look at the Asia. Asia, not much has changed there. It's still holding this move down. None of these levels have been breached just yet. Then that's probably a key anchor to the downtrend around that 22. Potentially there's another lower high here. We'll have to see how that plays out. And the Hang Seng's probably, look, Hang Seng's looking a bit weaker for me. You can see this movement. You've got that M style of pattern. I think Helen, if you're in here, that's what she likes to look for. It's pretty much what I like about that, for the downside anyway, is that you've got this move down, it corrected up, it tried to put in a higher low, and then, okay, that was all looking good. But the fact is that we pushed back up, we washed out the previous high. Essentially, that's a double top with a washout. When you get a washout and it reverses, it's not really a good sign. Especially, you can see that there was a bit of congestion just above 31,000 probably for the weekly chart. I'm on a daily for probably about 6 days there. That congestion above it popped and then it extended. It actually gapped up on the open and then closed on its lows in that session. You can see after it washed out those highs at 32, and then you got a red candle and then boom, straight through there. So, and you can see it gapped down, popped up, retested it, and it's on its way down. It's just taken out this low through here. So for me, it's not looking too strong. It could fall short around that 29 mark and just start range trading for quite a while the US works its way out. The big M, she calls it. There you go. So it could get a reaction off that 29. It doesn't mean just because it's reached that and you've got, that's essentially a lower high there, a major lower high. Again, it's going to be what's the US going to do as to whether we go down. We're starting to get extended, you can see down here. So it could just react off 29 and then up and away. But I think it's still dependent on what's going to happen in the US. And if it does break through there, if you want to sort of pick a target, I can't draw that out, but that, I can't grab it. That's my biggest problem. From that high to low, extend that, and that's going to take you, say, give or take somewhere around that, which is just breaching through that 28 zone. So it could take out another 1,000 points to the downside, even extend that before it starts finding some buying support come in. But we'll see. We'll see. Does that make sense on that, guys? XJO, let's take a look at that. The good thing I like with ours is that it's still holding up. I want to get this on a bigger chart. Just bear with me a second. XJO on a complete chart. I think there we are. We're on a weekly. So we still got the weekly. I'm just going to check before I say it. Holding up. So we've got that weekly trend still holding up. So it's more that second scenario. You've got the anchor level to that weekly trend. So you've got this move up, a decent correction here, really coming back to that anchor. Then we had that extension up, pull back, found a lot of buying, and it looked like it was going to roll over then, but the buying support held an anchor. We've got that third leg up. Now we've come back in. So we're coming to that point where if we can't hold up here and we start getting down to test 56.50, I'd be concerned. I'd be more concerned if it pushes down, pops back up, and then builds a lower high, a major lower high. We could get this a really big correction of this longer term leg up from pretty much the start of 2016. But if it just holds up here, if we take that away, we push down, we hold up here and we start to get some higher lows forming and then pressing up, then I'd expect over the longer term, it's going to start attacking through 61.50 and potentially up to the all-time highs somewhere around 68 because it's still got that weekly trend high. It hasn't broken. Struggled to get through 6,000. You can see once it approached 6,000, that's a very horrible line, isn't it? Once it popped through, it struggled, it extended there, and we've had a deep correction because of what's going on in the US, but everyone was sort of expecting that sell-off in the US. We're still holding the weekly trend. The daily, it's got, probably I would suggest that's your first move down. We've had a good correction up. You've had your secondary move down. So it's all slowly coming together. I mean, again, it's going to take a lot of time. I wouldn't expect this just to lift straight off this level and pop back up through 61.50. I'm more inclined to believe it's going to be not exactly like this, but it's going to take quite a bit of time, a few months maybe, to work its way out. Just to get that positivity back in the market, people starting to load the boat again, getting back into the ASX and starting to press for the highs. But again, we will see. We will see. All right, let's just take a quick look at what we've got in the US. I just want to look at where the bonds are, volatility index, just to see what's happening there. I'm just going to find out where I'll put it. Here we go. No, that's not it. That's not it. So we'll start off with the bonds. So you can see that the $3 level, 3% level is say 2.9 to 3. Actually, I'll draw this up. Go away. There we go. Discard. All right, what I want to do is just take that. All right. So what you can see, it's up near this 2.9 to 3 zone, which is obviously the concern for bond traders, interest rates, equities. Once it starts kicking up through there, then obviously there's some concern for higher debt levels, all that sort of thing. So that was pretty much when we had this push up. That's when we had that initial sell off. When I think it was a Friday night. Friday night was the first leg down. Had a big leg down. Then Monday again we had that just capitulation, or Tuesday. So that's what it was caused by. Now everyone's sort of left that go to the sidelines, forgetting about it. You don't see it too much in the news, the bonds, but on yields, what's happening on yields, it's more obviously with the trade war. I mean, news just goes from one thing to another, but you just got to remember what they're doing. This could be, we've had this leg up. Well, probably not this there. We've had the initial bounce up, then we had this pullback. We had this inside sort of consolidation through here, and it's got a secondary move up. What we're doing is correcting because this leg up was quite strong compared to the initial leg up after this long-term contraction. So can everyone see what I'm talking about? So you've got one big leg up, which is broken down to, higher highs, higher lows, so on. Big correction over the good part of, it was about a year, close to a year, this correction. Then we have that secondary leg up. So I haven't expanded that chart, but if you take that from low to high here, we're potentially coming up into that zone. Just got to get rid of someone. Just 1 second here, guys. There we go. That's all right. That's all right. All done. So this could be part of the second. We don't know whether we're going to just correct from here and get this type of price action over the longer term, or whether this is just as a minor correction and we get the third leg up of this overall move. Does that make sense? So if you think this, I'm on a daily chart. So this is a daily chart. So this is your weekly move, your weekly leg up, correction on the weekly, another weekly leg up. So we're in the midst of that secondary weekly leg up, and you've got to break that down on the daily chart, which is made up of high highs, high lows, and so on. Now, are we going to correct from here like this, or is this just part of that? We're going to get a third sort of leg up, 1, 2, and potentially 3. So this is what it's just that action at the moment. I don't mind this action. I mean, if I'm a bull, I don't mind this action. It's not really corrective, and we haven't. You can see the difference between when you get extended, this move's just quite safe, and then you bounce quite hard, and then you get these sharper moves. Whereas this is more controlled. Bang, 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 bang. Does that make sense? So it's more controlled. The steepness of the correction is quite light. I guess you could. It's not that steep. So to me, that's more of a correction before we start heading up for a new high, which we would be targeting essentially through 3, which I think in turn will put a fair bit of pressure on equity markets, and it may come out of the sidelines. So just keep an eye on the bond yields in the US. You know, if that's the case, and everyone's gearing up towards interest rates again. A fourth interest rate rise, there's probably going to come another wave of selling into that, and that's what could cause that secondary leg down, that extended leg down on the S&P and the Dow. Not saying it's going to happen, but it could potentially, or everything lining up for that type of thing. Now, what was the other thing? Volatility. The VIX. I don't know if anyone follows the VIX. Here we are. We had this big spike up. That was that initial drop, and we've obviously pulled back, but we're holding a higher low on the VIX anyway. And we've got with this, if you get the secondary sell-off on the Dow and everything, when we made those lows, retesting, we bounced and then retesting lows, the VIX hasn't gone as hard. Like, it hasn't been, the volatility hasn't spiked as hard. And remember that they were talking about when the VIX spiked, it got to certain levels, all the the rebalancing, all your algos kicked in with volatility that's an input into the algos, kicked in just this big wave of selling. That's why we got that big spike. That may or may not be true. I think there's some substance to it, obviously, but the VIX hasn't potentially triggered that again. Now, if we get another wave of selling, you might see that spike in the VIX, or it could just obviously press down. So it's another thing just to keep an eye on. VIX, if you got TradingView, just to keep an eye on what the VIX is doing, and just see. You can always Google it. Just talk VIX index, and you'll get to be able to follow, pricing of it and what it's doing. But if you start seeing the VIX spike, volatility spiking, there's less agreement between buyers and sellers. There's more, fighting between buyers and sellers. Sellers taking control, not generally buyers taking control. When buyers are taking control, and it's, as we see in a bull market, the VIX is quite low. When everything's falling off a cliff, that's when you get the spike in the VIX. All the fear starts kicking in. So when VIX is high, I associate that with higher fear and markets heading south. All right. Now, that's pretty much what I wanted to look at. I don't have too much we've got an eye on at the moment. We've got, just to go over, rehash what we do have. I'll get over here. SMI, that's the weekly. SMI on a day, that's going quite nicely. We've got the 4 alerts running at the moment. We've been long that from, I think, 7:14. I can't remember, to be honest. Yeah, 7:14. We take a profit at 8.99. We took partial at 8.99. It's pulled back. We've raised our stop on that one to 7.55 maybe. SMI 7.60. So we've raised our stop on that. So we've locked in on the second half a small gain on that one. Just anticipating. I mean, if this can't get through the highs from here, or at least off an inside high or low, it can't pull back and buyers start stepping at, say, 8.25 and then push through the highs. This is going to be a deeper correction because it needs to clean out. If it can't get through those highs, it needs to push the buyers out of the market, just put some fuel back on the sidelines to come back in. So it needs to have a deeper correction in order to do that. So that's why I'm happy just to tighten up the stop. I think that could easily, good news out today, which has triggered that gap up on the open. but just see if it can flow on over the next few days. You get that little spike up through that 9, spike up through the highs and continue, just press on up. I don't really have a target on the upside, but if you go to the weekly, say taking it from around 4 to 7, a $3 rally roughly of this leg up, just adding that from 6 to 9, takes you about 9. I would love to see it spike up through 9, but if it starts, that's why I'm anticipating it potentially could find a bit of pressure up at 9 again, and I would potentially be happy to lock it in. If we start seeing a reaction back off 9 and it can't get through after a couple of days, it may just be worth taking it, closing it all out, and then seeing if it can reset itself for another big move. But I don't want to be holding it. The same token, if we get this type of consolidation again over the period of 4 or 5 months, I don't want to be holding something for that long, doing nothing. I'd rather be out, locking the gains, using that money somewhere else, and then if it starts setting up again, jumping back in. PPH is another one we've had. We've taken a partial at 402 from, I always forget where that one was too. I've got it here, haven't I? No. Let me just find out where I did get long from. If anyone can remember, that would be appreciated. Let's get out my spreadsheet. PPH is 377, so it's just on this break up through here. I think it was on this, not that candle, it was on the next day, 377 on the open. So we had a buy entry there, I think it was 376, and it gapped up on the open. We got done the next day. It's traded up well, took a partial on that one, but it's still looking good. You can see how this is not conducive to a weak market. You can see this type of price action. So anyone, if you just go and study when they do correct a weak market, you can see something like this. When it's pushed up, it's got extended ahead of itself. You've had 1, 2, 3, I don't want to count, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, say 10 straight down. And it was a decent correction back to the MAs. And then you had the pop up, you had a deeper correction there. And then it started, this is a macro correction, more of a macro correction. Then we started holding the higher lows. So when you have a macro correction, you're looking ideally for a new leg up. And a new leg up could potentially mean, from $2 up to 4, another $2. So you take that up from, say, around 340 to 550, 540. So this could just be the start of a move up to 550, if that's the case. If that's the case, great. I don't want to get cleaned out of it. I wouldn't mind seeing if we can just hold it, but at the same token, the overall market could still find some weakness. So I'm getting a few. Sorry, Paul. As a side note on the website, we're just upgrading the website, which helps the app as well. And it's just in the midst of getting upgraded. So they should be on the app. If you've got the app on the phone, you'll see the results on there. We haven't been able to update the list just yet. Nothing's changed. It's just the gains, the current results. We're somewhere around, well, here they are here, 86.65 at the moment. That's not of today's prices. But this spreadsheet, that's the one I normally put up. Oh, it's actually here. This is the one I normally put up on the site. You can link into that, where we're at. But the only thing changes until we close anything out, this list doesn't change. That's just closed trades. The only thing that really changes is that percentage and the dates. But at the moment, yeah, we're at 86, probably 65, 70, somewhere around there. After today, we'll have to see. But that'll get added hopefully today, tomorrow. That will be fixed up, or maybe just over the weekend. We'll hopefully complete that website and get it back to, well, with a few improvements, running smoothly. What was that? That was PPH we're talking about. So yeah, like I was saying, just find in the app. Let me just check, mate. I thought I could. If you go to on the app, open trade portfolio, should be under there. Yeah, 86.65. It's under open trade portfolio. If you go back to the main menu, open trade alert portfolio. If not, I'll just email me if you can't find it. I'll send you out the spreadsheet. All right. So this one, yeah, like I just wanted to reiterate, if this is just a pullback of, this is your first pullback of your leg up to 540, whatever we're saying, around 540, this is, I like this kind of price action. You've got this pop up, it's had a pullback, made a minor lower high, your secondary move down. It's just resetting, but it's resetting, it's hovering around that $4 mark. So if you start seeing a higher low build, only a minor higher low, and it start edging back up through 410, I'd be really back onto this if you're not into it. We may send out another alert, because I think that could trade up through 420 on its way to that 5 to 540 mark, and there could easily be a 2, 3 to 1 out of this one. But at the moment, we're just going to be sitting back holding this, see how it goes. PPH, RSG, yeah, missed out. We're looking for somewhere profit up somewhere around the 140 mark, 138, 39. I think we had it. We missed. We fell short of that with that pop up there. Still up from 121. Still looking okay, but gold obviously. I have to see how that gold. If there's a bit more volatility comes into it, might find gold spikes up again. RSG gets a bit of a kick on, but we'll see how that goes. It's still holding up quite nice. The weekly chart still looks really good. I think this could still just grind higher. I want to see obviously a partial just around that 140 mark, and then just see if we can open up the second half to see how it goes. Still up on it, looking okay. Now Hub's the short we got. Not 100% sure with this one just at the moment. The reason I say that, it's holding up. Potentially this could be a high low. There's a few things with this, and this is the whole point of getting in early. Actually, I'll do something else. I'll get this up on a bigger. Just grab that again. All right, so this short here, the reason why we're getting in this one, it's nice and early, and this is what we said quite a few times, is about getting in the unknown. I mean, the unknown gives you the best payoffs, but you've got to have your price action, your structure, the reason why you want to get into it. Getting in the known is more when you've got so much confirmation that every man and his dog knows what's happening with it. And then your payouts are not going to be quite as good. Obviously, it could, you could be reducing your risk, but your payouts are not going to be quite as good. If you've got reasons for getting in and you know what your structure is doing and what it potentially saying to you, then it's good. You get some of the good payouts in the unknown. So the reason why we're getting into this one short, we know that's had a good run up. There's not a lot of, potentially not a lot of substance behind Hub and where it should be. Potentially the valuations shouldn't, price shouldn't be up towards that 11 mark compared to what they're actually doing. And that's your fundamentals. You'd know more about that if you look into it. But I'm getting that vibe after speaking to a few people. So if you're looking at it from that perspective, maybe it's getting a bit overcooked up here. It's had a good run up over the longer term. If we get to a weekly chart, you can see this move up, minor pullback, another move up, minor pullback, and this leg up has been from pretty much just above 4 to around 1150. It's been a good strong leg up, and it hasn't really corrected itself. It hasn't had that macro correction where a bit of heat's coming out of that. Even if it's a really good stock, and I'm completely wrong on the fundamentals, you still would need, when it gets a bit overcooked, if you've been holding this longer term, you're going to be looking at, oh, should I take something off the table? Should I book some gains? There's going to be that psychological side start to come into that. All right. So if that's the case, we're happy to go short. So we've got, if that's it, and people are starting to run out of steam here. So we're looking for evidence of it running out of steam. You've got essentially that double top. You've had that push up, a good correction. This is your first decent correction in price, in value. Okay, probably if you look at it from here, you've had this little minor correction in price. From here to here is not much. Push up, again, not much from here to here. Not really much here either. This is the first deeper correction we've had. And that starts happening when markets get overcooked. All right, so if that's the case, that's not a reason to sell just yet. You've had this push up and you see the savageness as it reacted off that high. And that's potentially your double top. That one candle, boom, straight down. Then you've got this move up, a push down. Again, nothing's really happening. You're probably your anchors. We could just range trade between these highs at 1175 and the lows at 925. We don't know just yet. But you've got this push down and then you pop up. Then you're starting to get this failure, and potentially we're anticipating this is your lower high, just below $11, and we sold it somewhere around, was it 1050, 1044? sold here, anticipating this is your lower high, off your double top, remembering it's had a good run up, it hasn't had a decent correction, it hasn't had your macro correction. If we're going to macro correct now, we're going to get this low taken out at 925. And then from there, it's just to see where it's going to go. All right, so the problem I'm starting to see is look, it could be holding up here just below 10. You've got that touch down here, a couple of green candles. I want to see it take out that 10 level or these lows. If it takes out that 10 back up towards, it's probably a 1050 high, takes out 1050, I'd probably rather close it out because that suggests to me we could be building enough of a base to have another run at least, 11 back up to 12. But if not, the pressure's still on, and this is what you're going to contend with, I guess, with being in the unknown. Does that make sense, guys? It can get choppy, but if all your reasoning's correct, you're not taking a lot of risk. We've got our risk around that 11 mark from 1044. Not a lot of risk at all, with the price structure behind us to see if we're anticipating that we're going to be right. And then when everyone else starts, if you bought it, say around here, you're not feeling too much heat just yet. If you bought it in this zone, you could be around break even, you could be slightly up, you could be slightly down, just depending on where you bought it. All right. So either way, when it starts attacking, was around 950, this low here. If it starts attacking that low, they're going to come under pressure. There could be, and these people, if they're not out, they're going to be well and truly under pressure then, and they're going to want to be bailing. So you've got these levels of traders that are in the market ready to bail. So you've got people here. The next level is going to be here. So if they all start coming under pressure, they're going to start bailing and sell. All right, and that's what we're looking for, them to start coming under pressure and then really start to capitulate. And really see if you can put these guys under pressure who bought it late into that trend, bought in the spike, have held it through this move and then held it through this move. They got excited again, then it's come back off. They're not feeling too confident when you see a double top. They're still holding it. It's come down, it's popped back up. They're looking, okay, a little bit more confident, then it starts backing off from a lower level, potential lower high. They're going to have reason to be concerned. And where they're going to puke the trade, potentially through this, or potentially through that 10 zone, or was it 990, thereabout, that 990 low, they could be puking it through there. We'll just have to see. But that's the whole point of getting in nice and early. You've got reasons why you want to be in. You can see this is starting to roll over. The MAs are contracting. They're pretty much crossing now. Now this reacts off this low, and it did open around that 1025. It popped down to 1012, 13. Lows today, low of 1008. So even after good rally in the US, good market today, we're up 35 points. It's struggling. It's still struggling. So I'm led to believe that it's going to drop through that low at say 985, or what's that low there? 990. Take out that support zone, and then it's going to start attacking. First port of call would be low at 959, then you low at 918, and so on. Once we start that, then you're going to get that capitulation of these buyers that bought it late into that trend. All right. I hope that makes a bit of sense, what we're looking for on that one. We're up slightly at the moment. We just have to see how that goes. So that's it. That's all we've got. So feel free, guys, I think before we talk about too much, put in some codes of what you want to take a quick look at. Any ideas, any trade ideas you've got, chuck them in, and we'll go from there. Any questions, guys? I know we tend to look at things a different way than everyone else. I tend to look at it, it comes from it's not sort of indicator based, it's more price action and levels based and what's happened in the past. So, excuse me, I do use stochastics quite a bit. Obviously, you've got volume and your exponential moving averages. I don't use those to base a trade on as such. That keeps me on the right or wrong side of the market. So it gives you an idea of what the overall herd is doing and what the potential payout and what sort of zones you're in. And from there, it just comes down to price action and what you're seeing, and trying to put a read on it. All right. Anything you want to take a look at while we're at it? Anything with an M pattern there? Helen? I like your charts, by the way, Helen, on Discord. They're nice. Did everyone get that? Or if you're on Discord, the forum we're looking at, did you get a chance to look at those charts that did post? It's more, I think we spoke about it before, about just, doesn't matter if you traded it or not traded it. It's always good just sometimes to go back and mark up a chart. If you see a good entry, if you just go through it, see a good entry, and mark up the steps that would lead you to believe that that was a good entry. If I can find what I'm talking about for you, for those of you that don't know, I'm not on the forum. I'll just find it. I was on the SPY. Wait, what was the date yesterday? The 4th? So I think this was the first chart, but that's a nothing kind of a chart. Then there was, so that there, okay, just while we're at it, this here was pretty much the level I was looking at. I just had an eye on this zone because it was a good little zone. It reacted off there during the night, bounced off, took out these highs. So you can see it's getting whippy. And then you got the lower high, pressed straight back down into this zone. This is a 5-minute chart. So that was on the open. So the open week popped up straight back down. So you got 1, 2, 3, 4, 5, 6 candles. What's that? 30 minutes of just boom, straight down into that support zone. Just cleaned out the overnight. I think it was overnight. I can't see that. This low here, and you know that was a previous zone of buying. It bought it up way back at, I don't know what date that is. It's a third. At about 6 o'clock, it started lifting off that zone. You got this working up into resistance, back down to there, buying support. Then you got selling resistance up here, straight back down. So that was the first chart that was sent out. Then we had, I'll get rid of that. Then you started seeing that reaction off there. So you got this is initial pop up. Then you got that high low, push up, come back down to retest it, a deeper correction. So really, at this stage, it started reacting off 57.26. So the bears are going to be dragged into that. The MAs are down, the 5 minutes are down. What I would have been looking for, ideally, what I would have liked to have seen is not so much as press straight back down into that support at 57.10. If I was a bear, I'd rather have seen a lower high build. You know, before it pressed down to 57.10, then that would lead me to believe there's an opportunity for it to go straight down through 57.10 and wash out these lows, clean out these buys that have bought it off, support, get them all, squeeze them back out of the market and press lower, take out these lows, whatever they were, 5,700, and who knows how deep it's going to go. But instead, it actually reacted off. You got this minor double top at 57.26, popped down, and it started to press high. There was an opportunity for it to roll over and find some weakness, but it needed to build that lower high, and then you get that inside lower high, and then okay, looking for a short trade. The buying opportunity was at that time just marking it off there, having that a deeper pullback, higher. So you want to see that strengthening buying, and then that slow correction, like in that 2 legs, you can see that, and then start to pop up. So that's what ended up playing out, I think. If I get the next chart up, that's what played out. And when I looked at it later on, I thought, okay, it's really worth, the idea was there, the premise was there. We started looking at it. We had it marked up. Okay, which way? What do I want to see if I want to be a buyer? What do I want to see if I want to be a seller? And then just marking up the ideas on the chart just for future reference. And then just putting all the factors in there that led me to believe that I'm working off a good zone. Does that make sense to you guys? Anyway, if you go back in Discord, that's what's, I think it's really worthwhile. It can be a daily chart. It doesn't have to be intraday stuff. It can be daily. It can be anything. Just marking up what you're looking at, what is a nice little entry, and you can go down to the 1 minute time frame to get. I just marked up 2 entries off a 1 minute time frame if you're intraday inclined. Where this was a good little entry. You got 1, 2, you got 2 tests down here of the lows. You got a minor high low. It's been tested twice. 57. I know it was 57.10 just below that. 57.08, 57.05. That double bottom there, and it started to lift. So if you get a higher low off there, it's worth a bit of a stab to buy and just see if you can wash out this high at 57.26, which it did eventually. Very aggressive entry. This had more confirmation in this zone through here. If you drop it to a 1 minute time frame, being able to minimize risk, and it ended up playing out quite nicely. So it's worth writing that up, marking it up exactly why you like it, and where you would buy, where you wouldn't buy, just to get it start to cement it in your head. So I think we spoke about this a while ago. I thought it was worth putting up there. All right. So we had Paul Banks. Banks, where are they at the moment? Yeah, big capitulation there, wasn't it? Let's get over here. Start with ANZ. I'll go to the weekly. I think I'm more inclined to trade off the weekly. That's not looking strong to me at all. Have to see how they go. Obviously, when is that? It's, Royal Commission's out of the way. When is that? When will that be sort of, come to the end of that there, Paul? The Royal Commission. I'm not following the dates. I'm just looking at those charts. They are looking weak to me. Again, this is, you can see how that move up was more controlled, then bang, sell off, pop up, secondary sell off. That's more of a strong market, but this is not particularly a weak market, if you know what I'm saying. It's taken a long time to start rolling over again, so buyers are starting to step in. They're getting squeezed out, potentially on that secondary move down. They might be squeezed out, or you might get that, more buying when we get down to, I don't know, 2600, say thereabouts. But I don't mind seeing that in context to this. If you're a really longer term trader and you've got a big position to build, you might have built some up here, you've got this squeeze back out, you want to start, or if you haven't bought it, you're looking for this as your risk level, say 22, for a longer term position, a bigger position too, in the way of funds, super funds, whatever. So if you're buying it up, if you're looking to buy it in here, you've got some weakness here, you might have bought it on this little push up, your secondary leg down, you're buying on the way down again, but it's all in context to this. Your trade premises, this low here, you're starting to lift off there. You're potentially looking for another higher low on the longer term, and then if it starts to lift off, then you start building some higher lows. I'll draw it up. I don't think I'm explaining exactly what I'm saying. So what I'm looking for, okay, so that's a weak market, boom, 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 boom. It's moved down. It started moving up. I guess you'd say here, lower, high lows, high highs, pushing up. Then took out. You got weakness starting to come to market. Tried to go higher, couldn't go there. And this is, for me, this is your secondary move down. But see that the way it was sold down here is quite heavy. Tried to react back up, built a lower high. This is your secondary move down. So in context to this low, if you're building a position thinking we're going to start to lift again, we get through the Royal Commission unscathed. Whatever they do, the bank's going to survive no matter what. But it's just the unknown at the moment, and that's probably why you're getting this move down. Couple that with what's happening in the global markets, that big sell-off is putting pressure on the banks, easing out. But if someone's still building a bit of a position, this is that's that two legs down that we talk about from the high 1, 2, and then you'd want to see it start to hold and start to contract in price where the volatility is coming out of it, and then to start lift off a higher low. That's what ideally I would start to be looking for around this zone, and just see if it can play out. And then you've got, you can see that market it's sticking to that. How do I explain it? That to me is contraction, and it's contraction. It's not contraction showing a very weak market. It's more contraction just off the highs, having a bit of a pullback, sucking in some people and squeezing back out when a move back up. Yeah, yeah. Look, it could be. Where's CBA? So that's ANZ. NAB's showing similar type of price action. If we get into that longer term chart, this is the monthly. I know it's really long term. You got that pop up. This is after GFC pop up, pull back, build a higher low, leg up, pull back. Potentially that's your higher low. So that's why I'm finding that as a key level. And this is just, argy-bargy within that move, that contraction on the monthly chart. So if that's the case, you got this little contraction lower, and then within, you got to go into the weekly chart. This is your key level here again on the longer term charts. So we're looking for, this is going to have a longer term move up. This is just a bit of chopping around because of one, you got global factors and the Royal Commission, bit of a sell-off here. If that is getting factored in, like Helen was saying, then we start to looking for that higher low and see if it can start to lift. I don't find I trade banks as well as smaller stocks. I think they're not quite as clean for me. I think you've got to trade them with a longer term perspective, and that's probably not my game, to be honest. Trading them from weekly charts and have wider risk on them and all these sorts of things, and just hold them longer term. So that's your NAB, CBA. CBA is coming more down to that 70 zone. If you go back down to the monthly, yeah, not sure about the CBA. That's your monthly chart. That's still, it's had a good leg higher. All this here could be just washing out this leg higher, washing out some of those late buys, putting them back on the sidelines. It's been a few years, don't forget. But we want to see that. I don't want to see that break through 70. I don't really want to see it touch on 70, to be honest. I want to see that start to lift off 70. Well, lift now. Pretty much I want to see a good little rally. I want to see it start targeting up towards 77, maybe pulling back to build that higher low like this. And then you get that move up. And again, it's going to have, we're going to be looking at this, that contraction. So you got 1, 2, 3, 4, about 2, 3 sort of legs lower. If we can start popping up out of this contraction, then ideally I'd like to be looking for that higher low to start building and see if we can get some sort of entry off a higher low in context of this longer term price action. It's looking all right, man. Caltex, what do you got on Caltex there, Paul? It's a highly speculative. Okay, let me just take a look through it. This for me, it is, you're quite right there. It's very speculative. I'll start with the weekly. I like the price action in the weekly is good. I think you could be early stages. So I've had a good leg up. Okay, so just working from left to right. What did it do? Let's just go to the monthly. Okay, so look at this. That's a monthly chart. A big leg up, big contraction. This here is just consolidation, holding those high lows, building the foundation for a new move up. Started expanding higher. Took out this high with this move up. Lower high in here or double top. Go back to that weekly. That's just here. So when you get those double tops, when the market's moved up, it's had a good correction. This should be enough steam if it's a strong market to push it up through the highs. It can't. Reacts back off those highs. So there, you're going to have a deeper correction, which you eventually got. So we go to that weekly. So we had this push up. Since you got your double top, then we've had to have that deeper correction, which we've got with that low through there. So that's 1, 2, good move down. What we're starting to see now, I mean, it doesn't mean that it's over yet. We could be, especially with this washout of this, it's really an inside level. We could get further weakness. It could push down to 28. It could range trade between there, or we could ideally be finding it's lifting and building that higher low just off that 31. So ideally, Paul, looking off this chart, you're off a good zone. And if you trade it sort of off that 31 zone, I think it's pretty nice. For me, there's two things. With this washout here, it could be meaning more pressure to come, and then it could be rolling over down to 28. But at the same token, you've got this press down here. It's taken some heavy selling pressure to push it down there. Yeah, I don't like the Woolies petrol stations. Yeah, so this move down here, it's taken a fair bit of pressure, but it's pretty much come into a nice little zone through there. And that's probably, you could argue that's your anchor to this move up. It's a good little zone either way. It's reacted. You can see that week it's reacted off that zone. It's taken a fair bit of selling pressure to just get it down there rather than to push it to 28. So it's more conducive to a stronger market starting to build, buyers starting to step in than being a weak market. With this kind of selling pressure from overbought to oversold, I would expect if it was weak to go blank straight through that level and really just not look back at all. But instead it's pulled up. So you've got buyers starting to step in here. So you've got potentially buyers through here, just starting to lift it, especially after what we've seen with this price action. All right, so if we go down to the daily just to see what's happening. I would have looked for me, I'd be sitting there still probably waiting for that higher low. So if we just mark back in those levels, 30 to 31. So you got that sort of zone through, well, we can draw that up. Let's just draw that up properly. Through 31. That zone in there, which provides some sort of support. We've just reacted up really just today. Today only. I mean, what the crude had massive, I don't know if anyone saw the inventories on crude oil. Massive drop in inventories there. which suggests supply is tightening, which suggests higher prices on oil, which, so on and so forth. So you've got Caltex has popped up. Ideally, I would be looking for my little higher low off this 31 zone, potentially 31.50, 32. I'd look for that minor contraction, and then I'd be looking for an entry. And that's just me. That's really just I've got confirmation that okay, we're reacting off that zone. It doesn't mean from here it can't just go bomb straight down. If over the next it holds up over the next few days and inventories next week are massively the other way, as in there's a lot more inventories than expected, then yeah, that's going to go pop. You'd expect that potentially just to drive down again. And obviously, what they're doing with Woolies is going to be a factor as well. But I would like to see confirmation in the way of that higher low. That's pretty much what I'm always looking for. It's right in that sort of 32 zone. I think it would be nice. Pop up, pull back, build the higher low, somewhere around 31.50, and then off we go. I'd love to see that. If we saw that, then I'd be like, it'd be a nice little entry because you've got that weekly chart starting to play out. And then you're just going to look to see what happens up towards that 35.50. If it reacts back up there, because it could easily, don't forget, if it's weakness in the longer term, and this is, well, let's get that back. This washout is longer term weakness, is a sign of longer term weakness. Then on the weekly chart, you're going to be looking for that lower high, but you still got fat in the trade, even if it pushes up to 33.50, 34, and then you get that lower high build. We get this sign of action, and then it starts to roll over from there. That's your entry to get out of the longs and book some gains. That's your, alert or your heads up to get out. If we start building that, and that's going to be your lower high on your weekly chart below this 35.50, we ended up on the weeklies, we're back up to overbought, but we can't get up to 36, we're only falling short at 34.50, then you're going to be looking at that going, okay, bit of weakness coming in. Yeah, okay, the longer term traders are starting to get back out of the market. They're probably closing out. That would suggest to me that we're going to bang straight down and through 31 over the longer term. I'd rather be out, sitting on the sidelines and just watching what happens from there. Does that make sense? So from here, if I got this, I'll be watching it, obviously, see how it reacts, see what the moves are to the upside. I'd like to see a good, strong move up, minor pullback, good, strong move up. That's a strong market. If you get this kind of move up, it takes out the highs, it doesn't take out by much, but deeper corrections, that's not a strong market. Does that make sense, guys? I hope just what I was trying to explain there. Any questions, shoot him up, put them into the chat. If not, by the way, Paul, it'd be interesting. Just keep us informed on how it goes, just so we can get a look at it. I'm a bit biased to the upside on a lot of these, on oil anyway. And then the energy sector. What's the energy sector? Oh, perfect. Look, that's, just read your comment there, Paul. I think that's a perfect way to do it. Yeah. So I think what Helen was saying, the angles of these MAs, if this is anything to go by on the daily, we could just be reacting higher, building that longer term lower high. What's the weekly again? And this could mean that if we get back to say 33, 30, 34, that's a sort of a reversion to the mean on the MAs. They could be rolling over on the weekly basis. And then you could get lower levels, but the weekly sort of, to me, I'll be biased up on the weekly. But just here, you've got to be biased down because of the MAs. So for me, there's a fair bit of work to do on the daily chart before the MAs start coming back in, they start converging, they start squeezing back in themselves, and then potentially turn to the upside. FMG. You're going to rub that in, aren't you, Helen? Yeah. Look at that. FMG is not looking too pretty. On the weekly, they're starting to expand, so this could easily contract, pop back up, and then roll over and have a deeper move lower. And it's all in context to this good leg up, though. So if you're looking to buy FMG, you'd be sitting on the sidelines for quite a while, I'd say. Unless you've got a massive position and you start edging in here, you've edged in here, you've edged in here, you've got a massive position you want to start buying into, but don't know why. Anyway, Yeah, so that's your MAs on. This is ideally what Paul would like to be seeing. Your MAs are down, start to see this reaction up and through and hold above the MAs, consolidate above, and then you get that secondary move up and then just assessing it as he goes. Maybe building, I don't know if I was going to buy it off, similar type of thing. Let's just draw that. We've got the benefit of hindsight just on this as an example. So you've got this level, it's coming to a level, it's found some buying support just in this zone, it's reacted back up, it's come straight back into that level there. So if you're looking at here, you just went and bought it off that support level, it's starting to, we're overcooked here. Maybe on the weekly, we're extended to the downside too. Actually, let's just check it quickly. We're in here. Yeah, okay, so you can see in here, stochastics were oversold, well overstretched here, so there's every reason, pretty much like your Caltex trade. you bang on there, John. They were expecting them up 1.5 million barrels, and they come down 4 point. So not only they were less than expected, they were negative completely. Jump the creek. There you go. Not up the creek. All right, so you got a similar type of scenario as probably what's playing out in Caltex. So this is what I'm saying. You bought it off this level. I'd ideally look for that pop up, pull back to get my entry, and then go. I'd probably enter a bit later off a higher low, but either way, you could easily enter here. You get squeezed out of the market. It starts to push up. You buy it. Maybe your second green candle, third green candle, somewhere in here, in this zone in here. If it turns around and retraces back on you and squeezes you out here, I'd be happy just to get out and reassess it. So it is a legitimate trade. It's not particularly my style, but there is value. So it's still trying to read the market and where you could be going to. You've got a major high up here. So if we start to find selling pressure as we get up there, what's going to happen? All right. And we got overcooked about here with this move here. We extended that. We got up here to around that 540 mark. Still in that overbought. Got pushed down to oversold down here, which is looking quite good at that time. We bought it, it's probably stupidly now that I'm looking at it, on a break up through 540 or somewhere in here, I think. And then boom, we got retraced on. All it really was, we got a bit overcooked up here. I didn't like when I saw it get through this level, wash out that high, and then retrace. So you got this red candle here. I didn't like seeing that when we were in overbought territory. For me, it was like, okay, have to give it some room. We pulled back here. We started to lift, and I think we got stopped out just there. I think Helen got out a lot earlier. For whatever reason, it was a good move. But you can see so what you had buying off this level, you've got this 1, 2 moves up. So what it's done is just cleaned out. You've got a lot of buying come in, and it started to clean them back out. You've got this deep correction. It would have dragged in some more buying on the breakthrough here as well. So it's got a lot of buying pressure that's just starting to edge in, and that's just fuel to squeeze them back out. And that's what's ended up happening. You've got this lower high in here, started pressing down, and that's just capitulated through there. We've taken out this low, and then we've potentially got this move down. Look, I'll draw that in another color. This move down here, potentially extrapolate, and we could have a bit more to go. It could be heading south a bit more before it starts to find some buying. I mean, it could just do it in here. Who knows just yet? Either way, this move down could be starting to run out of steam. We'll just have to keep an eye on that on FMG. What I was trying to get at is just working off this major level. It is a level. It has reacted off that zone. It's not a clean reason to buy for me. Off there, I'm not looking for a minor high low. I'm looking for deep. From here, I would like to have seen it had a good correction and start holding a major high low. That makes sense, somewhere around here before. And then that could potentially move up through 610 and so on. That's what I would have been looking forward to re-enter as a long position, but instead I didn't get that. I was probably preempting it there, but instead it turned around and just retraced on me. 505. Yeah, so you're a bit ahead. Oh, it's probably around the same level, wasn't it? Well, we're a bit lower. I think we got out around that. I can't quite remember now. Unless it was below that low there, we got squeezed out a bit lower than you, 490, 480. But anyway, so I hope You sort of see what I'm saying there. Working off a level like that, you've got to have an understanding of what could play out and have different scenarios factored in. If this plays out, what am I going to do? If it finds strength, so that there is not really strength. It popped up a little bit, went sideways, another little push higher. This move here really wasn't too great. I was expecting a good high low, but at this stage, if I just clean it up a bit more, at this stage here, I would have liked to seen a bit more work done. I would like to see something like this. Ideally, a bit of buying pressure. The sellers try to give it a bit of a go. It's getting bought up at slightly inside higher levels rather than just bang straight up. So probably in hindsight, wrong buying opportunity, but so be it. The proverbial happens. So is that? I hope that's making sense. I've probably gone off track quite a bit there. But in reference to Caltex, the daily, this level through that 31 zone, 30 to 31, or 30 and a half to 31, it's a good zone. It's a good buying support zone. We don't know what's going to happen longer term weakness, or this is just the start of a good potential leg up. Even if it's the start of a good leg up, on the daily chart, you've got a lot of work to do. Okay, from the weekly, if this provides a higher low, it's got a lot of work to do for me on the daily, and it could take a good few weeks to play out. Does that make sense? Yeah. Does that make sense, you guys? So you've got to just have it in context to what's happening. All right, what we're doing here, it's a good little buy. Nothing wrong with that buying opportunity. Like Paul said, he's going to be edging into a position. If you're doing that, there's nothing wrong with buying your first parcel off that 31 zone, buying up. If it has a good little move up and has a good correction and starts to look like it's, we're going to oversold, we're holding a higher level, okay, that could be reason to start jumping in. You see your MAs coming together, they're potentially crossing to the upside on the daily, then you've got your weekly heading up, your daily heading up, everything's starting to look a lot rosier for you. You got your higher low in place, buying into some more or starting to load up to a full position on Caltex with the idea that that's showing a lot of strength. It's going to work its way up through 36 and just see where it can go. Then you're going back to your weekly. Through 36 suggests it's going to take up to 39 and so on. If not, and we start holding, it starts to show that it's a weak move up to 34, 33. So this zone in here, 33, 34, is a weak move up. And that by that I mean more this kind of move. We're not getting that strength. We're not getting a spike high. Well, it's a bit overcooked. We're not getting a good move up and a good reaction, and we're not getting that inside move. If you don't see this kind of price action, but you're seeing this kind of price action, that's not too strong. I wouldn't want to see that off that zone, because that would mean for me it's going to be a major lower high and then we roll over. All right, I think I'm done there. I think I finally got it out. RFF. Let's take a look at that then. Okay, I'll quickly go over this one. I'm on the weekly. The one thing I don't like about this with RFF, I find it slightly different. I don't find that weekly trend is in your favor. It could be. There's nothing to say. When that weekly trend is up, how do I explain this? For what I look for, I'm big on anchors, as you probably know by now. The anchor of a trend, what's anchoring the trend up? If it's been broken, if the anchor's been broken in anything for me, and that's your swing levels, whatever you want to call it, it's early signs of weakness. Not saying it always works, but you can see here, probably an anchor here, anchor here. If I work my way up, that's a good little correction. Anchor here, it's got to move up. We've got that lower high led to a break of that anchor. So for me, what I'm starting to see at this level, especially after this kind of move up, is potential weakness. And potential weakness, I mean that we've just broken this anchor. We've reacted back up. Okay, that's all good. And you couple that with that potentially going to squeeze in. We could pull back to 210 and start the build. There's nothing to say that we can't hold up. This is just a bit of a wash out of that anchor, and then we spend a bit of time building, holding the higher levels. So if that's the case, if it's still positive, it's not a bad idea. You can hold it there. You're not going to come under too much pressure. It's just going to take a bit of time to start working its way out. So ideally what we've got here is this move up. If I just draw it in a different color. So that's your anchor level here. We've got this pullback into the anchor, which is this move down here. A reaction up. You got that 2 legs down. It's broken the anchor. There's nothing to say we can't just continue to contract, but hold back. We retest that anchor level. We start to hold. Okay, and then we've got this move on. We start to see it, and okay, then it starts accelerating, taking through the highs, and continue its merry way higher. If that's the case, great. But for me, I just don't like to see those anchors broken. And if we start to hold here, say for example, if we pop up here and we can't get to this high, we can't get out of this contraction, that to me potentially could be the start of a good leg lower. This is your leg 1, extend that from here, potentially somewhere around that 180, 190 mark. So just bear that in mind on the weekly. We have that secondary leg lower to clean out. Don't forget, it's got to clean out a lot of these buys that are built up through here. Clean them out, put them back on the sidelines. They can book their profit, be happy, get back on the sidelines, ready to re-enter when it's time. That's what could play out on the weekly. Excuse me. On the daily, if I was looking at this one, I mean, it's quite clear on the daily. You can see this is your anchor we were just talking about, 210, push up, lower high in here at 240, press down, washed out that anchor, started to lift. We're still getting a bit of weight. It's just this, just see this last little bit in here of that daily movement. That's not particularly weak market. So for me, this is fairly contradictory. So you got that little push up, that secondary move down. I don't know where it's going to finish, but couple that with that good strong move up off your $2, your high low in here. This good move up. Well, it's not looking. Ideally, it's not looking too bad. Does that make sense here, guys? So for me, the weekly chart after breaking that anchor, it's got me a bit concerned for a weekly move down. But it's the way this is not weak. This 1-2 move down, that's not too weak. You want to see it more capitulate, especially on this secondary move down, and then that's a lower high, and then you're attacking back down to 210 below, and then you got potentially that move down to that 180, 190 somewhere in here. All right, we're probably going a bit overboard there, but 215. That's a good entry. I'm guessing that was back here off that breakup. Great. If you book some profits up here, I still think it's got potential. It could easily lift. So like I said, because I'm caught between two, I would rather, for me, because I'm not in this, that should move up here. We've got 1, 2. If I want to see confirmation for a buy, if I want to get into this one, I want to see my higher low again. That's what I want to see. I want to see that break. I want to say a little push up, pull back to build the higher low, and then I've got my entry criteria. Don't care if it's a bit higher than, say, 215. I don't care if it's 225, because this here would lead me to believe that you've got a major higher low. We're going to break up. We're going to attack through 235. We're potentially going to get up to the highs of 245 and so on. And up we go. I hope that makes sense here, guys, anyway. But I might call it a day there, guys. I might have to call it quits. But I hope that made sense there, Paul, guys, and Paul. 13th of March. So that was the candle, wasn't it? I'm guessing. 14th, 13th, perfect. So you can see Paul's entry was, he's got that push up, a pullback. He's got his high low. He bought it through the break of that high on the 13th. It's all looking quite good. Obviously, you've got to take into fact just what we were talking about. And again, this, just remembering the stochastics, it's quite a good pullback from, good selling pressure. But that selling pressure to me is getting soaked up here. If it's getting soaked up, what's that leading me to believe? That we're going to see higher prices. We're going to see a push up through 230 to 35. All right. Yeah, you're right there, Alan. All right, guys, I better call it a day. Thanks very much for joining me. And again, I hope you all had a good Easter. Be back in on Monday at 12:30 again. We'll have another good chat then. Enjoy your weekend, and I'll see you then. Cheers, guys. Bye.